The Climate Institute is proud to be partnering Australian Ethical in the launch of its Climate Advocacy Fund. It's the first fund of its type anywhere in the world, and we'll be using it as the vehicle to create awareness around these climate risk issues. The Climate Advocacy Fund is the vehicle that we have partnered with Australian Ethical in that will allow the creation of not just these but other climate-related shareholder resolutions. Generally, investors are becoming much more active in the issue of climate change risk. Around the world there have been many shareholder resolutions relating to climate change. There was over 100 in the US last year, and the number in Europe is increasing all the time. So this is just an extension of that trend, and now we see Australia's first climate change shareholder resolution being brought to the market. These resolutions are very material. This is not about secondary business. This is core to the future health of these companies. These shareholder resolutions are helping their shareholder owners to protect their long-term interests by ensuring their carbon competitiveness in a low-carbon world. These resolutions are critical to everybody in Australia. We all have our superannuation funds invested in these very large companies, and it's been our concern for some time that some of their investments have been made on too short-term a basis. What a lot of these resolutions are trying to do is to ensure that they account for the various climate change risks that we know will materialise, both regulatory and physical, so that we can protect those superannuation nest eggs going into the future. Australia has the highest proportion of CDP signatories and UNPRI signatories of anywhere in the world. These resolutions are a fantastic opportunity for them to show how they really understand the long-term risks associated with climate change in the companies that they own. The Carbon Disclosure Project is the preeminent source of company-level emissions data anywhere in the world. It's been going for around about 8 years now. It's used by Bloomberg for trading and so forth. There is still a proportion of Australian companies who have significant climate risk who do not respond to the Carbon Disclosure Project, despite repeated requests. Certainly the absence of a short-term carbon price in the Australian market is important, but it's insignificant compared to what's going to happen in the future in the carbon markets. This is an inevitability. Carbon markets will occur, they will be in Australia, and they will be worldwide. And these resolutions are designed to protect shareholders' interests by ensuring that these companies think more in the long term. Investors realise that the Copenhagen Accord was a commitment from politicians to creating a carbon market at some point in the future. As such, there is a real risk there will be a significant high carbon price within a few years. And it's this expectation, whatever probability you attach to it, that needs to be put into the investment models of the high emitting companies, some of whom we are targeting through these resolutions. People must realise that short-term markets work in a very peculiar way. The companies that we're looking to raise resolutions to are investors in very long-term assets, up to 40 years in some cases. So the absence of a short-term carbon price is not really that significant. And what these resolutions aim to do is to bring elements of the long-term, the expected carbon price, that will make some of these investments marginal in the future into today's terms. We've selected 4 companies over 3 resolution types here, but really the message for Australia's high-emitting companies is quite clear. All the other companies that have yet to have resolutions passed on them should understand that we will be raising these resolutions again. We want to get 100% of Australia's companies disclosing their strategies for reducing carbon emissions. This first resolution type is to ensure that those companies realise that there is an obligation to disclose their risks around climate change, and thus we want them to respond to CDP as soon as possible. The two companies that have been selected for the resolution to encourage response to the Carbon Disclosure Project is Aquila Resources and Paladin. The second resolution is a very important one because within the Carbon Disclosure Project we are asking that companies describe their strategies for reducing emissions, and the second resolution type which we're putting onto Oil Search is to ensure that this company can give its shareholders the right perspective of the right quality of emissions reduction strategy that they need. Woodside Australia is one of Australia's most successful resource companies. Many of its assets are very, very long-term indeed. What this third resolution type is about is trying to get the company to explain the basis of the assumptions around carbon price and other commodity prices that are used in their investment assumptions going forward. Shareholders need to understand what the company thinks is going to happen in the carbon price markets and in the commodity markets to make an accurate assessment of whether or not that investment is reasonable.